bring on board Entero Healthcare's management. We have CV Ram, Group Chief Financial Officer at Entero Healthcare Solutions, joining in with us right now. And on the back of their Q3 numbers, fairly recent listing that has happened as well. 20% growth in revenue, EBITDA is up by 54%, margins, slight bit of an improvement on that front as well. And profits of the company have doubled. 7 crores is what the profit is at on Q3 basis. Mr. Ram, very good afternoon. Thank you so much for joining in with us on ET Now. And I'm going to start by talking about in terms of your top line number. Growth has been phenomenal when I'm looking at it. Obviously, we have spoken about it even before the listing as well. But 9-month FY25 growth, when you're looking at it on a 9-month basis, seems like there has been a bit of a mutish performance, flattish performance there. What is the reason for that? Is it mainly because of the lesser number of acquisitions that are there? One could put it out over there for the subduedness in terms of revenue. And what is the outlook that one should expect in terms of growth for the 9 months?
See, historically, we have delivered, at least minimum 2x of IPM growth, Indian pharma market growth, both organic and inorganic put together. And actually, our last 3 years CAGR has been 36%. Out of that, organic has been 22% in the past as well. So in the current year, as you rightly said, yes, the acquisitions have slowed down a little bit because we were doing the listing exercise, and whatever growth that is reflecting predominantly is all organic, which is a positive performance.
Point taken, but what about the growth outlook for FY25? Do you think overall there could be a strong growth in FY25 as well? And even in terms of profitability, what kind of numbers should we expect, let's say, come FY25?
See, we will continue to drive organic growth, being, around 20% next 2 years. And this predominantly comes from adding customers, adding more geographies, and, with our, the product range that we have. So that we will continue to drive, and inorganic growth also we would like to, emphasize in the years to come, because with the IPO, our balance sheet is much stronger now. So that gives us fuel to, do more inorganic acquisitions as well.
Right. Also, obviously, that's the outlook that you're watching out for in terms of going forward as well. What's the word that is one could watch out for in terms of the margins of the company as well? Could we say that, the margins are expected to improve from here on as well? As of now, for the quarter, we've seen it around 2.9% is what the EBITDA margins came in at. What is your internal target that you're keeping an eye out on for FY25 onwards? What is the target?
We drive the levers in terms of like procurement efficiencies and, high margin products, and also operating leverage to improve the margins. And internally, I think we are targeting to add at least 2 plus, that is from a 3% to a 5% over next 2 years.
Thanks so much for making time and speaking with us. Just